Jeanny, how has the markets began to price in this potential trade war?
We talked to a few analysts and strategists in the past few days, and they are warning that the markets in both China and the United States are yet to price in a significant impact of a rising trade disputes between the two largest economies.
So how do they think that the market will cope in a worst-case scenario, say if a trade war just breaks out and we see retaliation from both sides?
Yes. Under the worst-case scenario, according to Morgan Stanley, they are seeing actually China and the United States levy 45% tax on the imported goods on each other. So under that case, the MSCI China index is likely to fall as much as 30% from the current level. And according to the Balkan International's forecast, the Shanghai Composite Index may quickly fall below the 2,800 level. So that's 10% from the current level.
Yeah, I mean, we've heard about the 45% tariff, but at least Trump hasn't mentioned that again.
Right.
When it comes to this potential trade wars, who could be most affected?
From the China perspective, the producers of footwear, consumer electronics, and apparels. So those kind of products are among the most exported goods to the U.S. So those makers would be heavily impacted. So companies like ZTE, Lenovo would be among the biggest losers. So from the U.S. side, so electronics companies that derives a large share of revenues from the China markets could be among the biggest losers. And also some well-known brands in the U.S. like Nike, Ford Motors, General Motors, Tiffany. So people are thinking, there could be a boycott by the Chinese customers if there is rising tensions between the two countries.